The stock market has been an absolute roller coaster the last few days. I'll explain what's going on. I'll also share 7 stocks that I bought today in my $2 million growth stock portfolio. Okay, so big down day for the markets across the board. The Russell 2K was down at one point almost 4%. The NASDAQ was down 3%. It closed 2.3%. S&P was down 2%, closed 1.37%. You get the idea. The VIX at one point was over 15%. Today is getting near that 20 mark. You know, bonds, the treasuries were actually down, which normally would be a good thing. Oil also down. Really everything was just down across the board. Even crypto selling off, just everything's selling off. And here's the heat map. You can see semiconductors really got hit hard. Nvidia's down 8%, Broadcom 8.26%, and so on. Doesn't really look too bad if you don't focus on semiconductors. Of course, semiconductors have been leaders for many, many months. So I posted this in the Discord this morning under the macro news events channel. And really what I was talking about last night. So last night I was talking about restaurants. I own a restaurant, and some of the news that we're getting from our managing partner has been a little bit bearish, kind of just pointing towards restaurants being down, recessionary type talks in his email that I got from him last night. And so this morning we got initial jobs claims, 11-month high. That's, normally it's been bad news is good news because it's going to convince the Fed to lower rates. But today we had a situation where bad news was bad news. And there are a few things going on here. Number one, so Powell talked yesterday about how we're going to keep rates the same, but in September, there's a good chance we're going to cut rates. The problem is it's August 1st. We have a whole month, a month and a half before those rates are actually going to come down. You also have the end of summer, which is seasonally weak. You have a market that was running really hot and just needed an excuse to sell. And really, if you look at the economic data across the board, it's starting to weaken. And so people are talking about the R word, a recession. Now, there's a good chance that doesn't happen. And this is just another reason to sell off towards the end of the summer. We've seen it time and time again. But the main takeaway here is that macro data is going to be very critical from this point. There's fears that maybe inflation suddenly creeps up the next time we get inflation data. There's also talk about how if you cut interest rates, you'll actually have a market sell-off. The reality is nobody knows anything, and there's just a lot of fear, there's a lot of FUD, and frankly, there's a lot of these stocks that just needed some air let out of them. A lot of those names like ARM and Mobileye, and there's a whole bunch of them that were just trading at way too expensive valuations. One real quick update, because this could impact markets tomorrow. Amazon and Apple earnings. Amazon's down about 4 or 5%. The headline here, shares slide on revenue miss, disappointing guidance for the third quarter. Now, when I look at Amazon, the thing I focus on mostly is Amazon Web Services. That actually did beat. You can see 26.3 billion versus 26 billion in revenue. Advertising was a slight miss, 12.8 billion versus 13 billion. I think it was still around 20% growth. You can see earnings per share had a nice beat, 126 versus 103, but that revenue did come in a little bit light as well as the guidance. Now, the flip side of that, Apple up 5%, topping estimates as iPad and services revenue jump. Now, since that headline, the stock is slightly red, however. We can see the numbers here real quick. EPS did beat, revenue beat, some strong numbers here for Apple across the board. The things that are going to be important for both of these stocks are going to be valuation as well as CapEx for AI, and if any revenue is actually coming in generating from AI. So just looking at the NASDAQ 100, this is the QQQ ETF. You can see that we're on the 100-day moving average. That's that red line right there, the 50s in the yellow. The purple line here is the 200-day moving average. Now, on Wednesday, we did have chart day. We said $478 resistance. So this was the first bearish reading we've really had in a long time, in many months. It either bottoms here on the 100-day simple moving average, or it could head to $416. That's the trend line on the low end, or 434, that's right above the S3. The 200-day moving average, that purple line, is around $428. Now, we did have a similar sell-off in April where we got about a 10% drawdown. You can see it's almost identical. So we could find buyers here and go higher, but there is some downside risk. So the first stock that I bought today, actually in both accounts, I've got the primary, the $2 million taxable brokerage, as well as that community portfolio. That's a $100,000 portfolio that we started in 2022. Did add some Snowflake. Now, I've been telling Discord that I do think this stock could probably bottom out somewhere between $100 and 110. It doesn't mean it has to happen, but here are some possibilities. My preference is 125 or less DCA, which is the zone it got into today. In fact, the low today was $121.45. It did close at 124.20, and after hours, it's at 124.60. So some of the possibilities here, you have this S2. This is a Fibonacci pivot point, 121.16. You also have the S3, which is 113.15. Now, these other two lines that are in red, this $119.27 line, this is from January of 2023. So you can see right here, it's always possible that it retests that low. The other red line is the low from June of 2022, and you can see it was $110.27. So I think there is a chance that it could wash out to that $110 level, and that's potentially where you could see buyers come in. Now, it could bottom any time, and of course, we do have earnings coming up for Snowflake on Wednesday, August 21st, according to TradingView. The next stock that I bought today in the main, Airbnb. You can see the possibilities here. We did breach the S2 just slightly today. That's $133.09. There's always a chance it goes to the S3. That's $126.19. So you can see this blue trend line here. It did break that trend line. I think that 135 or less area is a decent dollar cost average area to buy. The last time we recommended Airbnb was around $100 to $105 level. Now, looking at Airbnb, it is down 2.29% after hours at $131.99. Now, they do report earnings next week, August 6th. But looking at this stock year to date, it's down about 2%. Over the past year, if you add the after hours, you're talking about 11.5%. The 52-week low is 113.24. The high is 170.10. Now, looking at Airbnb from the profitability side, it does have really strong gross profit margin, 82.86%. Now, it does have an A plus here in Seeking Alpha, and growth is pretty solid. If you look at the valuation overall, it's a B here, 14% forward revenue growth, and the valuation, the PE gap forward is going to be about a 30.77. Definitely not dirt cheap from a valuation perspective, but this is a free cash flow machine. I think, of course, if you have those recession talks, the stock could certainly go a lot lower. But I do think it's attractive, 135 or less DCA, and here's some areas to watch. So this next one is Paycom. It just had earnings. It beat on the top and bottom lines. You know, decent growth. It's only about 9.2%. This is more of a mature company, pays a dividend, right? So this is going to be more of a DGIF type company, a little under a 1% dividend, shown here in Seeking Alpha about a 21 forward PE ratio. So considering it has recurring revenue and pays a dividend, this is a very unique stock because it's a DGIF. It's a SaaS company with recurring revenue and has a reasonable valuation, including a PE, which is very, very rare. You can see it did bounce from this $139.50 level, and it is quite a bit higher. You can see post-market $167.38. This R3 is up here at $190 or so. I just think it's a decent stock to add when you look at valuation. The earnings last night seemed like it was coming into the clear. So of course you can buy a stock on the way down and you can kind of DCA, and sometimes that's a falling knife. You can also buy once confirmation's there and it's in an uptrend. And I'm not saying it's 100% in the clear. Of course, you know, a recession, something like that's going to impact a company like Paycom because it is focused on SMB. But if you're talking about buying shares at $165, knowing it could go less, I think it's a decent buy. And of course, just as a reminder, anything that I'm buying is generally for 5 or more years unless the story changes. So this next one is definitely not going to be a dirt cheap stock by any means. It's Shopify. You can see it's below this blue trend line right here. The S2 is at 55.68. S3 is going to be at 51.09. I think it's attractive to DCA below this blue line here, this trend line, knowing that it certainly could go lower. It could even break $50 a share. And this is another one that's going to report earnings here next week, Wednesday, the 7th of August. So of course, earnings could make this stock go much, much lower, or it could pop. I just like nibbling a few shares here. And again, I'm thinking 5 or more years unless that story changes. I've got 3 more stocks to cover for you. If you want to be a better investor, make sure you subscribe to this channel and click that bell for notifications. And if this video is helpful, drop me a like and drop me a comment. So Celsius isn't going to be necessarily a cheap stock, but if you look at the growth metrics and what it's trading at right now, especially considering it's dropped from $100, it doesn't mean you go buy it just because it's dropped 50%. But looking at the overall story and several tools in that tool belt, can draw a conclusion that this is something that's attractive. It has decent risk reward when you're looking at $45 or less a share. You can see it's teasing right now with this S1 Fibonacci pivot point at 44.60. That S2 is $40.70, S3 34.38. Another one with earnings next week. This is according to TradingView, Tuesday the 6th. Of course, that can make the stock go higher or lower depending on the earnings results. Now, this next one is not a stock, but rather an ETF. I did buy this in the main. It broke the 100-day, not quite to the 200. The 200-day is about $206. The trend line's way down here, something closer to $170, $175. But SMH, this is the VanEck Semiconductors ETF. It did get up here to about $285 a share, has pulled back nicely. In the post market right now, it's 228. This is around the level I bought it today, and it certainly could go lower. This first support line is around 219. That 200-day moving average 206, and this S3, somewhere just below $200 a share, $198 or so. This is something that I feel you can buy and hold as a long-term investment. Of course, semiconductors are typically going to be cyclical in nature, but when you think of semiconductors, the new oil, they fuel all the secular growth trends that we talk about, whether it's cybersecurity, whether it's AI, autonomous driving, you get it, on and on and on. Semiconductors fuel everything. This is something that we've been investing in Fired Up Wealth for many years. We called it the new oil back in August of 2020. I've owned SOX, that's SOXX, that semiconductor for many years. I added this as a new position, as a starter position, like $9,000 or so I bought of the SMH. And a lot of that has to do just with the weakness that we saw in semiconductors today. You can see here, NVIDIA down 6.7%, Broadcom, you can see the names here on your screen. Semiconductors are getting whacked, and it's just a way for me to get exposure to a lot of these high quality names, and I know they certainly can go lower. So I'm happy to buy shares here, and if it wants to go lower, I'll keep buying more. And this last one I bought in the community portfolio. I do own this in both portfolios, but I have a much lower cost basis in the main. I did buy some in the community portfolio today. Zscaler, $175 or less DCA is a preference. Of course, $155 even better. I bought some right around the price it's at now, $174 and change. If content like this is helpful to you, make sure you subscribe to the channel, click that bell for notifications. And if this video is helpful, return the favor, please, and drop me a like and drop me a comment. Have a great rest of your day. Take care.